Okay, so Ethereum has crashed, and the question is, will this continue? Is Ethereum a good long-term investment? What's the current usage of Ethereum? What are all those gas fees used for? And at what point in time would it potentially make sense to enter the market again? And in order to answer this question, we will look at several factors. We will not just look at technical analysis, like at some random lines we draw on charts. We will also look at back-tested technical indicators, and we will look at on-chain data. So a lot of things to cover, so let's jump right into it. Now there's many ways to look at Ethereum, and the most straightforward way, let's start with that, is simply the US dollar chart, or in this case, the tethered chart. And on here we have been in this sidewards trading range, right? Slightly upwards trending for Ethereum for quite a while, since beginning of last year. And one might argue that we could potentially see some kind of a support soon, right? These kind of lines, by the way, I haven't drawn them just yesterday or last week or so. This is a pretty obvious channel for quite a while, so just feel free to look at older videos on this channel. So this might be some kind of a support. Now that being said, I do not like that the price is below two specific moving averages. And those moving averages here, they do have meaning because they are back tested. And if you follow this channel, you already know what these moving averages are. It's the 23 and the 39-day moving average. And just for a quick recap, for the new people coming to this channel, when you've got a simple strategy where you exit the market whenever the price is below the moving average, so the moving average here is in purple and the price is in white. When the price is below the moving average, we are completely in cash. So this is our portfolio line in gray. Once we go above the moving average, we follow the price movements, we buy into Ethereum. And so you can backtest this kind of strategy and you can find out what kind of portfolio lines perform actually the best for Ethereum. What kind of duration should you take for the moving average? Because what most people do is they just randomly select, say, the 50-day moving average, right? Or the 100-day moving average. But all of these moving averages, they give very different kinds of signals, right? They might tell us to enter way later when we take a longer duration, or they might tell us to trade way more often when we take a shorter duration. So you want to find out what's the ideal duration of a moving average that tends to generate the best trading signals, at least that tended in the past to generate the best trading signals. And when we do this backtest, ignoring all kinds of trading fees and only looking at the day end price, so at the price at midnight UTC time zone, then we find out that the 23-day moving average works very well and the 39-day moving average works very well. They also work well to limit the maximum drawdown, right? To limit our risk exposure. So that's what we work with on this channel when looking at Ethereum. We look at the 23 and the 39. Yeah, I'm toggling now between those two charts. This is how the portfolio line looks for those backtests. And so that's why short term, it's always hard to buy directly into such a drop. Even though we do have slightly increased trading volume, it's not yet massive. We actually want to have very high trading volume to be comparatively certain that at some point in time we might turn around, because this is where the coins, they change hands, right? Where new people get a new reference price and that might potentially stabilize the price. Currently, the trading volume is higher than usual, but not astronomically high. And the issue is simply to always betting against the general momentum, betting against the market. It can work out, but more often than not, it does not. That's what the backtest implies, right? The backtest implies to rather follow the trends than betting against them. And so even though when we use such a strategy with the 23 and 39-day moving average, we are never going to pick up the perfect bottom over here. But I'd argue that the risk versus reward, even though the reward isn't as high anymore to buy over here, the risk versus reward is probably still better, because it's way less risky to buy over here when we have already bounced off than to directly buy after a crash. So I feel comfortable not buying and not picking the exact bottom, simply to be assured that most of the sell-off has already been done. Now that's the technical analysis. Now this is backtesting. But what about on-chain data? What is Ethereum actually been used for? And this might not come as a surprise. Most of the gas is being consumed by NFTs. And I think that's got two reasons. First of all, trading NFTs is very, very expensive in terms of gas. It's very complex, smart contract execution. And so every transaction itself costs a lot, thus pushing up the gas consumption of OpenSea. By the way, there are actually 2 NFT related gas consumers over here. It's not just OpenSea, it's also this Vyvern proxy registry. That's also for NFTs. So the complexity is one thing. The second driver why NFTs are probably so dominant for Ethereum is simply because the ticket size is high. When you trade altcoins, you now have to go really large on your investments, large on your trades, which might, depending on your asset, incur quite a bit of slippage. And then you face arbitrage bots, you face all kinds of nasty things. So you have to move large quantities. And with NFTs, you kind of avoid all of that headache that you would have with altcoins on Ethereum. And the other point is the competition for altcoin trading is really heating up on competing layer ones, right? You can now trade altcoins on Avalanche, on Phantom, on the Binance Smart Chain. And that kind of speculation is way, way cheaper. The transaction fees are way lower compared to Ethereum. And so that kind of market tends to move away from Ethereum. But Ethereum is still the very dominant force for NFTs, simply because there's so much money locked up in Ethereum. So the most popular NFTs, they get traded on Ethereum still. And that makes Ethereum a very NFT-heavy bet. So if you don't believe in NFTs, I don't think you should be investing in Ethereum. NFTs is really the driver for gas on Ethereum. And this might only change if you can really get significant gas reduction with the move to proof of stake. But that kind of a move has already been talked about in 2018. So this is not a new idea. It simply takes very, very long for the Ethereum team to get those things rolled out. Releases get postponed all the time, thus opening up opportunities to be taken by competing layer ones. Now, I don't buy Ethereum yet, even though we are pretty close to this support, and that's because of this backtested moving averages. And that's also because I am bearish on most of the NFT market over the very, very long term. Not all of it, but most of it. And that has a fundamental reason. If you haven't yet watched this video by Tech Lead, I don't agree with everything he does, right? I don't really agree with the million crypto that he released, but sometimes every now and then I do like his content. And this is one of the videos I think is very, very valuable. This shows how most of OpenSea's NFTs are actually not decentralized. The storage of the images, they are simply stored on Google Cloud, probably owned by the OpenSea company. The metadata on your NFT, such as what kind of properties does your avatar have, they don't get stored on the blockchain. Instead, you have to query an API that's hosted by OpenSea. So if OpenSea would ever go down, if OpenSea would shut doors, which I don't say it will, but if there is some kind of maybe heavy regulation against NFTs, then most of the things, not all of it, but most of the things you can buy on OpenSea, they will simply come down as well. And that also destroys this whole idea of interoperability, right? Of using NFTs across games and things like that. NFTs are still heavily centralized, not just in terms of trading, but even in the actual contract, in the actual design and the execution of the contract. And that's the main reason why I personally stay away from Ethereum for the time being. Short-term momentum doesn't look too great. There's a heavy dependency on NFTs. Those NFTs are very centralized, not just in trading, but in their very core of the smart contract. And ETH 2.0 has been promised for quite a while. It has been discussed since the last crypto winter, actually. So this is not some kind of new innovation. We already had this discussion here in 2018 when the gas prices were at around $3 per transaction. Now they are at around $40 or $50. So the efficiency improvements, they don't seem to keep up with the actual demand for gas. And so all of this combined with the fact that Ethereum is already almost half the size of Bitcoin, right, in terms of dominance. Bitcoin has 41% dominance, Ethereum has 18% dominance. So its market cap is almost half the size of Bitcoin. The upside potential is probably somewhat limited. It takes a lot of money to double or triple Ethereum again. All of those things combined make me believe that Ethereum is probably not the very best investment right now. But of course, I can be wrong, right? Nobody can read the future, and this video might simply age like milk. But I hope you got a few new data points for your own consideration. And so don't just follow blindly some kind of YouTuber you find here, but do your own research. And if you found the information provided in this video useful, then please give this a like. It will help the channel grow. Also, don't forget to subscribe because I publish videos regularly. You might also consider the premium membership. We've got a private Telegram channel where you can ask me any questions. We've also got daily market updates and exclusive content around technical analysis, around backtesting, things like that. There's also the public Telegram channel. Simply search for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.